Welcome back to the channel. So this video is a market outlook trading video where I'm going to walk you through the buyers as well as the key levels for all of the currency pairs here. Now, if you are new to this channel, we send out our signals every single week in our Telegram channel. So let me just start off by doing a quick review of this week's performance. As you can see right here for this week, it's not fantastic results, okay? It's pretty difficult, but we still managed to do a small profit. So there are going to be weeks like this, which is going to be very difficult. In fact, in a moment's time, I'm going to show you why I expect next week to be as difficult as well. Okay, so make sure you prepare well, make sure you watch this video to the end, because next week we have a lot of speeches. So if we just jump over to the economic calendar right here, you can see that next week there's speeches after speeches. You have this ECB speech here, you have FOMC speech here, you have FOMC speech here, you have BOE speech, you have another speech, another speech, another speech. So next week is looking like a horrible week to trade. Now, if you are new to this channel and you do not know why I say it's horrible, well, it's because during conferences or during this kind of news event, no one knows what's going to be said during this kind of events. Someone could say something crazy, or a question could be asked and the reply is interpreted in a certain way, and then the market goes crazy. So next week we really have a lot of speeches. You have this federal chairman speech as well. You have BOJ, BOE, ECB, pretty much everything. Most currency pairs have speeches happening next week. So you want to be very careful. I don't expect it to be an easy week, okay? This entire month has been a really challenging month. Previous week, the week that we just came out, okay, we had FOMC, we had this SNB press conference as well. So it's really been very difficult. And this is also why we started to ask if you would like us to send cryptocurrency trading signals out, because there seems to be more movement in the crypto market and there's probably more opportunities there compared to trading currency pairs which have all these events and then it goes nowhere. And even if it goes, it's not that conclusive, the move. It's pretty whippy. So with that being said, what I want to do is I want to go through the charts so that I can give you the key levels to focus on. As always, I'll be using the 3-day trading guide right over here. Okay, if you're new to this channel, first and foremost, make sure you grab this because it teaches you the MPE trading strategy. If you are new, definitely start off by looking at this guide because it teaches you a trading strategy which beginners can use. Okay, it's a very easy trading strategy, works on a daily time frame, and I will be using this in the charts to analyze the market shortly. So if you don't grab this, then you will not know what I'm talking about, okay? So just head over to the link in the description down below and download it, and of course after that, watch this video till the end. Now, I would really appreciate if you do me a small favor and hit the thumbs up button if you have not already done so. Do hit the subscribe button as well. So let's look at DXY. So DXY is still in an uptrend. So last week, I talked about this level here, and I said that this level is resistance, okay? So what happened was that price retraced into this level, exactly as I mentioned, and then, it's just struggling. So market condition is still bullish, okay? If you use the MPE trading strategy, it's bullish because you have a high here, you have a low, you have a higher high, and a higher low. So it's still bullish. However, price now is trapped between support and resistance. So if you want to go long, by the time you get a confirmation candle, something like this, chances are you're already in the middle of the range. Okay, you're not buying low, you're not selling high, you're buying in the middle of the range. So this is why it's very difficult to trade, at least for most dollar currency pairs, because it's just ranging. So if you've been trading for some time, you will know that easy money is made in following the trend, not in trading ranges where the market doesn't go anywhere. Okay, so just be very careful about this. Anyway, most of you will not be trading into DXY straight, but you just want to note that DXY is probably going to be mixed, it's going to be ranging. So when you look at euro dollar, pound dollar, and all the other dollar currency pairs, you want to be careful and not assume that price is going to trend one direction. Now let's move on to euro dollar. Euro dollar right now is at support. Now I would say that euro dollar is actually more bearish than bullish. So because there's the high here, there's the low, there's a lower high and there's lower low, and this is the support. So right now price is at a zone of support. I would really see this as entire zone of support, something like this. Okay, this is support, and right now it's at support. Now, if you use the MPE trading strategy that I mentioned, in a downtrend, you should be looking to sell only. You shouldn't be looking to buy. So even though price is at support, I don't recommend that you buy. Advise you to be patient. Wait for price to come up higher. Look for a candlestick pattern here, and then you can take the short down. That's how I would recommend that you trade it instead. Okay, it may not happen immediately, but this is the higher probability setup compared to buying right here at support. bearish buyers, take note of this level and the fact that price is at support right now. Now moving on to pound dollar. Pound dollar, I would also say it's like bearish because you have first top here and second top. So let me just draw it for you. This is the first top right here, and this is the second top. And this is the neckline, and you can see that this neckline is broken, and then after that, price is retesting it. So this is acting as resistance right now, and we are having a bearish bias. However, range is rather tight. You have support here and you have resistance here. In fact, if you were to follow this candle, and let's say you go short right here, something like this, and place your stop loss just above the high, you can see that the risk to reward is not fantastic because again, you are selling in the middle of the range. Now, this is the difficulty of trading in this market right now because the range is very tight, and by the time you get the confirmation that this resistance is probably going to hold, you're already selling into the middle of the range or you're buying in the middle of the range. Something like what I mentioned in DXY right here, where you have the support here and you have the resistance here and you get a confirmation somewhere in the middle of the range. So this is why it's quite difficult to trade right now and why I recommend that you be more patient. If it's possible, try to get a retracement up higher first. If you really want to short, try to wait for a retracement up higher, look for a candlestick pattern, or perhaps go into the lower time frame to look for an earlier entry trigger, and then you enter based on a lower time frame. That's what I would recommend, but again, that would require more experience. Not everyone has the experience to go into the lower time frame and find an entry trigger right here. So if you are a beginner or you're still struggling, what I recommend is that you just be a bit more patient. This week that we are talking about, the next week, is probably going to be difficult. So you want to be very patient. If possible, take lesser trades, focus on the higher probability ones, okay? If not, try to look at other markets like the crypto market where the market is really moving, and then you probably get better opportunities there. For FX, next week is probably going to be very difficult. Now moving on to dollar franc. Dollar franc, it's right now at support. So last week we talked about how this entire zone is going to be support, and pretty much the whole week is just a retracement. You have, this is Friday, Thursday, Wednesday, Tuesday, and Monday. So it started selling down into support, and right now price is at support. Now at a glance, you should see that this dollar franc is actually bullish. There's no reason why it should go bearish because you have the high here, you have the low, you have the higher high, you have the higher low. In fact, if you were to look at the sub waves here, you have a high, low, higher high, higher low, higher high, higher low, higher high. So there's absolutely no reason why you should be going short. In fact, if you were to draw this trend line as well, just connecting the lows, you can see that price is at support now. Okay, thing that we need is that we need an entry trigger. Remember, we're using MPE. M stands for market condition, which is bullish as I explained. P stands for price level, which is really this zone that I mapped out for you. Let me just draw it. Okay, which is this entire zone of support. The last thing that we need is we need an entry trigger in the form of a candlestick pattern. Right now, I don't see any strength here. This is a doji. This one, it's not really showing much bullishness. So if on Monday or next week we can get a nice candlestick pattern here, it could be a pin bar, it could be an engulfing pattern, then you can actually go ahead and take the trade. Now if this level is broken, then what you can look at is obviously the recent high first, which is here. And then if this is broken, then there's a lot of space for price to go towards the recent high that was made in April. So you can see that there's a lot of space. This is a setup that I recommend that you trade because there is space. Hopefully by the time you get confirmation, it's not somewhere here where you are buying very high. So again, it really depends on how the candle closes, but you want to pay attention to dollar franc. Okay, dollar franc is probably going to be an easier trade compared to the other two currency pairs which I went through just now, euro dollar and pound dollar. Now Aussie dollar, at a glance, it's not very clear about the direction, but I want to just highlight that this is looking like an inverted head and shoulders. You have the left shoulder, you have the head, and then you have the right shoulder. So traditionally in an inverted head and shoulders pattern, it means that it is reversing, the trend is reversing. But granted, you need to have confirmation of the neckline. The neckline must be broken. So the neckline looks something like this. It's not broken yet. However, there's early signs that it is reversing. So for this reason, I would really say that Aussie dollar is really mixed. You could see this as a downtrend because if you look at the big picture, you have the high, low, lower high, lower low, lower high, lower low. depending on whether you count this. If you count this as a lower high, then price has already closed above it. That means that the market is bullish. But if let's say you ignore this, you do not count this as a swing high, perhaps you look at the weekly chart and you just look at this entire movement down. You have the high here, low, high, lower low. So it really depends on how you see it. So I don't really want to give a direction of whether I think it's bullish or bearish, but I just want to highlight that there is early signs that this could be a bullish reversal in the making, and I see this movement here as a range play. I would really just draw it like that. This entire zone, I would say that this is support and this is resistance. In fact, if you were to look right here, this is actually demand as well. So right now, price is just ranging between the resistance here and the support here. So again, I don't recommend you trade this because the range is very tight. If you were to, let's say, go short here based on this candle because it's very close to resistance, then if you sell here, you're really selling the support, which is not very wise. So this is not a currency pair that I recommend that you trade. Watch carefully for this. It will probably just go up, down, up, down, up, down within the range for next week. So just be very patient. Try to avoid trading this currency pair. But if you really must trade, just take note of this support here and this resistance right here. Moving on to dollar CAD. Dollar CAD market condition is still bullish because if you were to look at the big picture, you have the high here, you have the low, you have higher high, and you have higher low, and you have this trend line. Now, price is still in the midst of doing a pullback. This pullback is pretty nasty because you just look at the wick. First it pulls back, then it retraces here, then it started selling down, then it goes back up. So even if you try to trade this movement down, it hasn't been a smooth one. In fact, this candle right here, look at how ugly looking it is. At one point in time, it went all the way up only to be rejected and closing close to the bottom. Okay, so it's pretty difficult to trade. Now, what I'm saying is that price could potentially retrace down lower to the right shoulder. So this is the left shoulder, this is the head, and this is the right shoulder. So I'm saying that price could potentially just drop further down and find confluence with the ascending trend line. So this right here will probably be a good setup to go long. Just be patient, wait for a candlestick pattern here. Could be a hammer, could be an engulfing pattern. Look for a candle here. This will probably be a high probability setup. So this is the setup that I recommend. I recommend that you focus on this currency pair and dollar franc for now. Okay, try to avoid trading currency pairs like Aussie dollar, which is really not very clear as of now. Okay, very straightforward setup, this one. If you get a setup here, then you want to be careful of this level first because this is the previous high here, and of course if this level is broken, then you can try to target the higher level right over here. Moving on to Kiwi dollar. Kiwi dollar market condition is bearish because you have the double top pattern here. So if you can't see it, just change over to the line chart. Okay, actually you can't really see it on the line chart, but basically the first top is here and the second top is here. I believe I talked about this in last week's market outlook video. So this is broken, this neckline is broken, and actually on Thursday we got a spike into this level, and you can see that this level is still valid. This neckline is valid, acting as resistance. After the spike on Friday, we had this close right here. So price is resisted here and we want to go short. However, support zone is also quite close. It's over here. And you can see that by the time you get a confirmation, again, it's the same problem. By the time you get confirmation, you are really selling in the middle of the range already, because this is support, this is resistance, and you're selling right here in the middle. So again, this is why it's so difficult. And right now, price is at 0.7005. 0.70 is a round digit as well. So round digit is a psychological number, so don't expect price to just drop immediately. If you really want to trade this, I recommend that you wait for price to retrace higher back into this zone, look for a candlestick pattern, and then you short it down. Please do not be in a rush to short it and chase after the market, because as I mentioned, you are already trading in the middle of nowhere right now. Now moving on to dollar yen, same thing with dollar yen. Every week I've been saying the same thing. I still want to stick to my analysis. Dollar yen is still in a range. This candle looks promising, however, it's not a clean break of the level. Notice that we still have a higher level over here. Okay, so market condition for this is still range bound. It's not bullish, it's not bearish. We need to see more confirmation. We need to see a clean break. Okay, I don't just want price to close above slightly. I want to see a clean break above, something like break above here and then retrace down. If we get it next week, then you can look for a retracement back into this level, something like that. Okay, probably like that. Close high, close high up, and then after that do a retracement back into the zone, look for a candlestick pattern, and then you go long. That's how I recommend you trade it. If not, price might just pretty much do something like this, go back into the range. I do not know what will happen next week, and remember we have BOJ. We have BOJ speaking. The governor of Coronda is speaking, so just be very careful. This might be a big fake out, so we really must see a big break of this level if you want to go long. Okay, if you don't see that, then please do not go long. Moving on to gold. Gold is still at demand zone. So I've talked about gold multiple times. I recorded videos addressing the movement in gold specifically, but you can see that price is still sitting on this demand zone right here, hasn't really broken down, and this is looking like a big inverted head and shoulders pattern. You have the left shoulder, you have the head, and you have the right shoulder over here. Now, does it mean that you should buy? I don't think so, because what happens is that this is a bearish market condition. Just look at the series of lower lows and lower highs. You have the high here, you have the low, lower high, lower low, lower high, lower low. So same problem as a lot of the other currency pairs. It's very difficult to trade because this is support, but this is resistance. So the range is very, very tight. If you really want to trade, then wait for this entire zone to be broken first. Something like this, let it be broken first, then wait for a retracement. Because what happens is that if this level is not broken and it just goes up, then it's going to be a tough fight. Price will probably do something like this. It will just fight its way between support and resistance, and until it's ready to break, then it will break below, somewhere here. Okay, so it's better to wait for this entire zone to be broken first. If this zone is broken, then we have the recent swing low, which is over here. Okay, that's how I'll trade it. So let's talk about Euro Pound. Euro Pound, I would say that is in a range. You have support here and you have resistance here. You can see that at a glance, this entire movement for Euro Pound has been pretty choppy. It's go up, down, down, it goes nowhere. And I would say that it's still probably the same. This is support, this is resistance. If you want to go long, try to go long as close to the support as possible. And if you want to go short, try to short as high as possible. Okay, there's no clear direction right now. It's okay to trade the range if you want to, but just be careful. Like the other currency pairs, do not short in the middle of the range. For example, if you say you follow this candle, upon confirmation you short here, it just doesn't make sense because you put your stop loss above the high and you put your take profit here. You can see that the risk to reward doesn't make sense. So if you really want to trade this range, be very careful. Try to get in as low as possible or try to get in as high as possible. Okay, NZDUSD. NZDUSD is a index which we talked about last week and talked about this support, this trend line, and true enough, price is supported by this trend line and it's looking good right now. In fact, on Friday, you can see that this pin bar right over here prove that this level here is kind of still valid. Of course, it missed it a bit, just slightly. You can see that this level here is actually given by the recent swing high here, and you can see price didn't really tested it to the point exactly, but I think the point is still the same. It's kind of showing that this level is supported. So right now, really I'm saying that price is ready to resume its uptrend towards the recent high right here. Okay, so this would have been a lovely trade based on this candle, something like this. Let me just show it to you. Something like this. This would have been a good setup. If you are not already in the trade, it's fine, but this would have been a decent setup that you could have potentially traded. Now, if you didn't catch this, it's totally fine. What you can do next week is that you can wait for price to retrace. Do not know you get it or not, but you could consider trying for a trade here if we get a candlestick pattern here. If not, then wait for retracement to go deeper back into this ascending trend line. Okay, again, it depends on the candlestick pattern. We need to see candlestick pattern in order to take a trade. Now, lastly, we have Pound Yen. Pound Yen is still bearish because it's following this descending triangle pattern. You have the lows here, and then you have the sell down right here, and of course right here. So this is a descending triangle pattern. So during a descending triangle pattern, you want to sell as high as possible. So right now, what I'm saying is that price is stuck here. Okay, I do think that there are a lot of people who are going to place their stop loss above this level. So let me just show it to you. So I do think that there are a lot of people who are going to place their stop loss. They probably short here, put their stop loss above thinking that price is ready to drop down. However, I think that looking at how things are moving, there is a potential for price to just hover right here to trap more stop losses above, and then once the stop losses build up here, price will go up, push it higher, spike, do a nasty spike to trip all the stop losses and then start selling down. Okay, this is what I expect. I expect price to just hover here just to build its position first and then go higher to trip all these stop losses here and then eventually start selling down. Of course, it is a possibility that price might start selling down right away, but between the two and considering the fact that we have conferences next week, I do think that that's a more likely scenario where price is just going to range here, collect the stop losses above and then after that trip the stop losses first before breaking down. Okay, so as you can see, this week's market outlook is a bit different than the usual ones I do, because the usual ones I tend to give more direction. But right now, we're entering into Q4, which is towards the end of the year. So the market is really quite difficult to trade. And you can see that a lot of these currency pairs that I've gone through here, it's not that clear. You don't have very clear skies, you don't have very clear movements, and the levels are very close together. For this reason, it's very difficult to trade, and I really urge you to please manage your risk, right? Please do not risk more than 3% per trade, because if you do that, you're probably going to blow your account, and this is a difficult period. So this is the kind of period where you want to size down. Try to stick to 1% of your equity per trade if possible, because when the market is not hot, you don't make much money anyway, so you shouldn't be risked so much, such as 3%. Try to stick to 1%. Okay, so that's all I have for you in this video. I hope you got a ton of value. Do make sure you grab the day trading guide if you have not already done so. You can find it in the description down below. Also, do join us on Telegram if you are a new subscriber and you have not yet checked out our Telegram channel. We send out our signals there every single week, so you definitely get a lot of value there as well. If not, thanks for watching, really appreciate it. I'll catch you in the next video.